This stock gives you exposure to one of the most powerful food trends out there. First off, read this disclaimer carefully. We will look at Mowi. This company is in the seafood industry. I have categorized seafood under the zeitgeists, which are a bunch of mega trends in the market. If you look here at seafood, here you can see the companies in the portfolio. We have a nice mix. Here you can see how far they are from the 52-week low and the 52-week high. Mowi, they are in the salmon business. Here you can see the recent prices, the beta. The order of the day is that we will first look at the website, then the charts, then some fundamentals, and finally we will have a segment about candlesticks. Let's just quickly look at the About section. Premium Sustainable Salmon. One of the reasons why I am so bullish on seafood, that's because of the science behind this product. There is an ever-growing number of nutritionists actively promoting increased consumption of seafood, especially oily fish, because it has all kinds of health benefits. And this is a huge trend. Salmon is one of the, I think it is actually the most popular of all oily fish. Some other oily fish are tuna, you have mackerel, you have anchovies, so on and so forth. At Mowi, we work with the oceans to produce nutritious, delicious, and supreme quality seafood. We fulfill 1/5 of global demand for farm-raised Atlantic salmon and are constantly driven by an innovation and the desire to achieve the highest standards of sustainability. In brief, almost 15,000 employees, 25 countries. Yeah, so here you can also see some history. They recently changed the name. They were called Marine Harvest before. Now they are Mowi. Let's look at the charts. Getting the big screen. The ticker is MHGVY. This is an ADR on the OTC markets. It's a Norwegian company. You can see that this is a very bullish trend. Dips were getting bought. The big crash we saw here, that is of course related to the virus, global pandemic. That of course begs the question, is this a very good opportunity to get exposure to this mega trend? You can see here that the RSI became extremely oversold, and there is a 71% positive correlation between this stock and the S&P 500. And you can see also the accumulation distribution line here. It's been increasing, consistently. Looking at the moving averages, you can see here that there are some resistance levels. We have the 10-week moving average here being a very clear resistance level. The rally from the low here, it's been timid. If we do some measurements, up here that was 20-ish%. We currently are only around 14-ish% from the lows. And so we are quite some distance here away from the highs. One of the reasons, or one of the primary reasons why this very nice and bullish stock has seen such a big pullback, that's due to the new rules pertaining to the actual processing of the fish. As you have probably seen, the employees usually are standing relatively closely to each other with the new containment rules relating, of course, to the pandemic. There's a lot of uncertainty when it comes to any food company that relies on humans doing the processing. You know, removing the bones of the fish and so on and so forth. But you could use that as an argument for this being stock being artificially low. Meaning, in this current chart, where you have a lot of bullishness before and then there's incredible uncertainty, we may have reached a point where most of the bad news are already priced in. Because down here, there's just panic, and the investors are like, well, how on earth is Mowi going to you know, process the fish anymore when there's all these restrictions about how close the employees can be to the fish? One of the obvious solutions would be automation, but automation, it's a complicated process. But looking further into the future, I certainly think that this entire seafood industry will be automated. But then again, okay, you could use this as a contrarian opportunity. From a technical standpoint, the bears are quite clearly in control, though you could make a case that we do have a higher low here. Let's go to the daily data points. Let's zoom out a bit. You can see that this stock's pays a very regular dividend. That's of course really good, and the dividend is actually rather juicy. The stock is currently at $17 and the dividend is $1.15. That's pretty darn decent. We are below, of course, all of these longer and intermediate term moving averages. Then again, we have seen the 20-day moving average turning positive. That is constructive. We are above the 20-day. If we do see some pullback, we definitively want to see the 20-day being used as a support level, because as you can see, it quite recently was a clear resistance level. So the lows here are getting higher. Yeah, this is interesting. Obviously, from a technical standpoint, it is not a screaming buy, but there is some constructive development at this point. Maybe the lows are in. When you look at this major sell-off, it is very interesting to see that the accumulation distribution line, it was elevated throughout. That is very interesting observation. So there is a divergence here between this sell-off and the AD line. Let's now get some fundamentals. The market cap of the company is $8.6 billion US. The beta is very low, 0.32. So very significantly less volatile than the market. If we go further down, we do not get that much detail here. Let's go to Saks.com. Here we get some information here about the industry. They have categorized it as food miscellaneous in the top 10%, which is good, though this is a very broad category. I do think that the reason why I created this seafood portfolio is because I think there's something very unique about the seafood industry that separates it very fundamentally from any other meat. The dividend here is very juicy. I mean, almost 5% dividend. That's a juicy dividend. That's very promising. Here is an extremely cool website I found, teletrader.com, and here we get some of the latest news about Mowi. The performance, it is still minus 35% year to date, meaning the pullback, it's been rather substantial. But then again, when we looked at the charts before, the contagion, the pandemic, it looked really good. Let's now have some info about candlesticks. Candlestick charts, they were originally made to track rice prices in 17th century Japan. Hence, they have quite some history behind them. Rice was traded on the Dojima Rice Exchange, and the nice thing about candlesticks is that they visualize actual price action, where real money was being moved. it tells a story about supply and demand in the market. The thing is that candlestick patterns, they tend to affect the market in typical ways when they appear. This is certainly a mix of self-fulfilling prophecy and, pure statistics. These right here, these are called hammers, and they look like hammers, and they are interpreted as bullish, given that the bears, even though they did push it down, the bulls were rather aggressively pushing it up into the close. So that is just one example of a candlestick. There are many candlestick patterns out there. A lot. Of course, some candlesticks are very relatively reliable, while others are, they are a bit far out there. A pro tip I have, and that is to overlay the one data point moving average on top of candlesticks. That makes the reading much easier. That's something I have done in this chart here. You can see the candlesticks, but then I have the 1 day moving average in black here. I think it becomes much easier to see patterns when you do that. Let's continue. Let's get into some candlestick anatomy. Okay, here we have, bull and, the bear. This part is called the upper shadow. Here you can see the upper shadow, the lower shadow, and this is called, the real body. Here is, this would then be the close, this part here, while the lower part, on a bullish candlestick would be here. On a day where price goes down, this here would be the open price, while this would be the close price. But if you take this candlestick as an example, then on this day in particular, price was higher, but then it pulled back, and price was also lower, and then we closed, off the worst lows. Candlestick charts were originally made to track rice prices in 17th century Japan. Yes, this is something I've already said. Real body. This rectangle section is the range between the session's opening and closing price. Yeah, so this is basically the stuff I have already said. Tall candlesticks are caused by great volatility, while short means the opposite. If you look at the candlesticks recently on, as an example, Mowi, well, not the most recent ones, but the ones during the panic selling, those are very tall candlesticks, meaning huge volatility. We do not simply look at the latest candlesticks, we also look at how it relates to previous ones. And many of the candlestick patterns, they are all about looking at patterns across candlesticks. So let's as an example, if you have something called bullish engulfing candlesticks, and that's when you have, let's say that you have the price going down, 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 then you have a big update, a big bullish candlestick, tall, and it engulfing a lot of the other price action, then that is that's a rather bullish engulfing. The question you need to ask yourself when looking at the candlesticks are whether the bulls or bears are gaining ground. There are definitively many different names for the various patterns, and there are always two sides to the markets. You have the bulls and the bears, and they both want to confirm and neutralize signals. These are my thoughts. Leave your own ideas in the comment section below, and whatever you do, of course, you want to let the trend be your friend.